Welcome back. Linked accounting has been around long enough now. We are starting to see some of our business owners heading towards retirement. If you've played your cards right during your income producing years, you have stashed away some great income producing assets and retirement accounts. When you consider the state income tax burden, state taxes can account for up to 25% of your total tax bill every year. If you can find a way to eliminate that state income tax, you can effectively cut your tax bill for many years to come by 25%. And all you know, eliminate taxes is our #1 goal. Some states are more friendly to retirees than others. Take a look at these income tax-free states. We know there are many factors that determine where you would like to live, but if your life is flexible enough, perhaps residency in one of the 9 states that do not have an income tax could work for you, especially given the range of climate and lifestyle options available out there. Many of our clients live in Utah, a state that has an income tax-free state within 100 miles of 80% of our population. Tax-free Nevada is to our west and south, and while Wyoming offers a tax haven to our north and east. As you would assume, there are a number of factors that impact the ability of the other 41 states with an income tax to agree that you are not still subject to their tax regime. I will focus today on Utah's considerations of allowing you to be excused from their tax, but please note most states are similar to Utah. As for Utah, they have a 3-test consideration to determine if you are still subject to the Utah income tax. Failing any of these tests will require you to file in Utah. The 2 most close-ended tests that would still subject you to a Utah tax, even if you have moved, are 1. You claimed a child on your federal income tax return that is enrolled in a Utah school, or you or your spouse are enrolled in a Utah State University as a resident student, or 2. You voted in Utah during the taxable year and were not registered to vote in another state, or you have filed for a primary residence property tax exemption with your county treasurer to receive a discount on a home's property taxes. The 3rd and final test is really vague and looks at all of the facts and all the circumstances of your life, but essentially asks the question, do you own a home in Utah that you intend to return to after your absence? This is an easy test to pass if you have authentically moved to another state, even if you have retained property in Utah. To pass this test and avoid Utah state income taxes, Utah considers several of the following factors when you still own property in Utah. 1. Do you have a Utah driver's license? 2. Do you have a child claimed on your personal tax return that is enrolled at a Utah college or a university as a resident? 3. What is your Utah home like versus your out-of-state home like? In other words, do you have a 5,000 square foot home in Utah versus a smaller 2-bedroom condo in Mesquite? 4. Do you still earn income physically in Utah? 5. Where are your vehicles registered? 6. Are you a member of a Utah-based church congregation, country club, or similar organization? 7. Do you list a Utah address as your mailing address on bank statements or cell phone bills or tax returns? Or 8. You spent more than 183 days during the year residing in Utah. We know the chance to eliminate up to 25% of your total tax bill every year is appealing and is very doable. But you should take care to ensure you cross all of the T's and dot all of the I's when your life circumstances still dictate some connection to Utah, even if you have essentially moved out of the state. As always, if you have questions or would like our analysis on other state tax requirements, please let us know.